Hey, my name's James Nicholson and welcome to my YouTube video. I'm in London today, but I've jumped out of a meeting because I wanted to do a summary of today's budgets. There's some good stuff in there and there's a lot of bad stuff, particularly if you are a landlord or someone selling a house and you're in a transaction right now. This could really impact that transaction and really could cause a lot of chains, I think, to fall apart in a bad decision, I feel, that's been made in today's budget. So we're going to talk tax, we're going to talk tax and more tax, because that's pretty much what it's all about today. But I think it's important to know what is going on, and that's what we're going to cover in this video. Now, if you're new to this channel and you haven't done already, do subscribe to the channel over there and hit that bell notification. We're nearly at 32,000 subscribers now. And the last question I've got for you is to ask you if you could do me a favor and smash like, tickle like, do something to that like button. That really helps with the YouTube algorithm and gets more views on this video, which I think more people need to see. So, Rachel Reeves has done her first budget and they said it was going to be painful, and boy were they right. I think some things they've got right here, but I think there are also some things that are just really don't make logical sense. They're going to have a big impact on the rental market and the property market as a whole. So I wanted to go through what we've got here. So first off is capital gains. Now for property, this hasn't changed much, but if you've got stocks and shares or businesses that you're selling, that is going to increase significantly. The rates on residential property are staying the same. If you're a lower rate taxpayer, it's 18%. If you're a higher rate taxpayer, 24%, which is the same on property. So I'm going to keep it focused on property. Otherwise, this video could go on for hours. So that's the same on residential property. Now, who does that benefit? Well, there is a landlord exodus at the moment. We've got additional landlord properties being sold, double the amount that compared to normal. And I thought that maybe they might increase this to try and kind of hold some landlords hostage, because if it did go up and they said, look, if you sell a property and you've got capital gains on that, we're going to increase the rate, you might not sell it in that scenario. So they didn't increase it on property. So that means those landlords selling will continue their transaction most likely. And it also means that other landlords that are thinking about selling might continue that transaction as well. Inheritance tax, that was speculated all week for weeks that the inheritance tax would increase. They've kept it at the same levels and extended that out. It was due to a change in 2028. It's going to be extended till 2030. So any inheritance tax issues that people have got will be the same all the way through till 2030. So that's kind of good. It was expected, as I said, that that would be somewhere where they took money from. Now, a lot of property investors now invest in limited companies. And so they might pay themselves or their partners or their children. They might pay them through that limited company, which would incur national insurance and income tax on. Now, the national insurance contribution, which is just the part the employer pays, so that would be the person that owns the limited company for the property in this scenario, that's increasing and by quite a lot. So the rate is going up from 13.8%, the employer contribution, to 15%. That might not sound like loads, but what is very going to make a big difference is the threshold. You don't pay national insurance on income below £9,100. They're bringing that down all the way to £5,000. So there's a lot more national insurance that's going to be taken from business owners. And my opinion is that that could make definitely a lot of employers reluctant to hire people. That eventually will hit the jobs market and potentially could hit house prices, but definitely I think could be a bad thing for the economy. So we need to see how that really plays out, but that's definitely something to keep an eye on. So that's national insurance contributions. Minimum wage is going up significantly, 6.7% up. The new minimum wage for anyone above 21 will be £12 2021. So quite a big jump. I remember when the minimum wage came in, I think it was £3. I was on £3.60 at Burger King for a long time, 4 times that now pretty much. But I do think that people on lower incomes have been hit the hardest by inflation. So that will put things right for those people, and hopefully they're estimating it will increase people's pay by £1,400 per year. Now, that's interesting to see what happens. So that could, I know some of you will comment on that could lead to more inflation. As people get more money, they might spend more and push prices up. So we need to keep an eye on how that goes. But from my side of things, I think if you're increasing people at the lower income, I think that's a good thing. Corporation tax is staying the same. So business doing over 250 grand in profits, corporation tax will stay the same at 25%. So that's interesting. The bad ones are coming up. The really bad ones coming up in a second. Any thoughts, questions or observations on any of these things so far, do comment below. I want to have a healthy debate on this, but keep it polite. Now, social housing. So social housing providers, they are able to increase their rents above inflation. So that means that's kind of good for landlords. So a social housing provider will get a government contract. They will then pay landlords to rent the property. So that potentially could be good if you're a landlord and you rent to social housing providers. You probably can increase your rent by more than inflation this year. Often contracts will be restrictive on how much you would be able to do that. So potentially that's a good one for landlords. They talked a lot about housing and affordable homes. There's going to be more money pumped into that 500 million initially, then 5 billion in total to help build more affordable homes. Let's see how that works out. We hear Labour are talking about building 1.5 million houses. Does this happen? I don't know. We'll see. A lot of this will be social housing, which is good. We need it. There's a big shortage of that, which is why social housing providers are able to increase more than inflation, because they need to be competitive in order to get the properties on the market. And the last one is the killer. This is brutal. Right, really, really brutal. And I think this is not greatly thought out. Stamp duty surcharge for additional properties is going up by an alarming rate. So if you're a buy-to-let landlord and you want to buy a second property, a third property, a fourth property, whatever, you normally pay a 2% surcharge on that rate of the stamp duty. So if the stamp duty is 2%, you'll pay 4%. If it's 5%, you'll pay 7%, and so on. And it goes on a scale dependent on how valuable that property is. That is going up from 2% to 5%. 5% is the surcharge. So whatever the normal stamp duty rate, that will increase. So if you bought a property that was in the 5% threshold, that will now be 10% stamp duty. That's going to put off a lot of landlords from buying additional properties at a time when landlords are exiting at record levels. Now, it's not, in my opinion, a smart move, because we have a housing shortage. We have a rental property shortage. I think what's going to happen is you're going to get more landlords leave, less landlords enter the market, and that is really going to make rents go through the roof. Now, if you're already a landlord, then that could be good, because you're now going to be in a less crowded marketplace. So your rental yields will definitely increase over the next few years. So existing landlords, that's potentially good news. If you were looking to buy a property, not great. Here's how it gets even worse. And I think this part is a big mistake. This starts from midnight tonight. So I could have bought a property, right? Maybe last week I could have bidded on a property at auction. I didn't, but I could have agreed at auction. I would have paid my 10% fee, and I'm working through the process with a solicitor right now. I've got the budget for 2% surcharge on that property. Now I need to get an additional 3% up front in order to complete the transaction. I tell you what's happening at estate agents right now. It is carnage I guarantee, I'm not even speaking to estate agents, I know it's carnage when they're trying to save transactions and chains. Any landlord that's buying a property, you could be in a chain of 5 properties. 4 of them could be residential. You've now got the one in the middle, for example, that is a landlord, and they've got to get an additional 3% to purchase their property. The whole chain of 5 deals could fall apart because they haven't got the time. The better and the smarter thing to have done with this was to be say, okay, this is what we're doing, but you've got till March 31st, the end of the tax year, in order to get things in line. This is going to be brutal for solicitors. Anyone that's involved in any transaction in the property cycle is going to be having absolute carnage today. I've got some stuff I need to speak to my solicitor about today. I'm just not going to bother because I know that they're going to have absolute nightmare trying to save transactions and get deals completed today if they can. Maybe they're probably working overtime to try and finish deals before midnight today if they can. But the short notice of that, the fact that that wasn't even leaked in the press, is insane, and that is a really not a smart move. You might not like landlords, but I'm sure you can agree if there's a housing transaction going through already, this will impact residential transactions and all of them because they're all mixed in together, and you just need one person to pull out and it ruins everything. Anyway, I'm going to do more updates on all of this stuff. There's a lot to read. I'd love to know your thoughts, questions, observations, opinions, anything I've missed in the budget. Do comment below because there's going to need to be a lot more content coming out this week to really digest and see what happens here. But yeah, not the best budget. They told us it was going to be brutal. They were right. Anyway, give me a like on the video. That really helps. Do subscribe. Check out all the other content on my channel, including this video right here.